Welcome to The Commercial Edge, the podcast where business, property, and legal insight come together. I'm your host, Elizabeth Rebolledo, lawyer, founder of Ardor Legal, and your guide to navigating the commercial world with clarity and confidence. Let's get into it. Well, hello, Matt. How are you today?
I'm good. How are you, Liz?
Fantastic. Well, thank you so much for joining us on Commercial Edge. Before we get started, I'm really excited to talk to you today about all things finance. And in particular, the topic that we've chosen for today, I think is really relevant. And I wish that we'd had this discussion when I purchased my first business. But before we get into all of that, please, can you just tell our listeners who you are, what you do, and what you love the most about what you do?
Yeah, absolutely. So I'm Matt, finance manager / broker, but I specialize in business and commercial specifically, ex-banker, and I provide clarity throughout people's goals for financial solutions. So I help guide them through that process. So yeah, that's a bit about me. I've been in the finance industry for six and a half years now, and almost 3 years in broking. And prior to that, it was all in the Commonwealth Bank.
And what do you love most about that?
It's the goals that people get to achieve, and I've helped them with that. That's something that I'm quite proud of, is being able to help people achieve their goals of, owning a business, commercial property, things that people thought they wouldn't be able to do, and being able to navigate that and make it affordable and something that they can achieve. That's what I love most about what I do.
That's really cool. In terms of what who your clients are, what do they typically look like?
Self-employed is majority of it. There are some clients who are still employed by an employer and choose to also have a side hustle. So I help navigate the finance behind that, as well as what they should and shouldn't kind of do in terms of preparing them for an application for a bank, or helping them understand what they want out of a business as well. Every business is different. Every person's circumstances are different as well. So yeah, mostly just self-employed. And
the types of industries that they work in, are they generally like trades or?
It varies, yeah. So I've helped out trades, so like electricians, plumbers, that type of stuff as well, all the way through to people who are engineers and they want a side hustle, like electrical engineers, civil engineers, that type of stuff. Yeah, so there's definitely no specific niched industry that I work kind of for.
It's far and wide.
Yeah. It's more around the people that I work with and around their goals, goal setting, and making sure that I can help them out in any aspect.
Before we get into the actual nitty-gritty of what we want to talk about today, I just wanted to also ask you just what you're seeing on the ground at the moment, what the mood is like with business owners that are looking to purchase as a result of the budget that we've just, the federal government has recently let out. Have you seen any changes in the mood and the environment in that business world?
Short answer is yes. It's definitely the sentiment behind what the future holds and the uncertainty of it. So there's a lot of business owners.
I think that's the big thing, the uncertainty.
Yeah, correct. A lot of business owners, they're going to have to change their structuring for tax with their accountants, that type of stuff. Regarding the finance side, that landscape hasn't really changed.
Okay.
The banks haven't really changed their policies around it too much. There's still a solution to be found. For people looking to purchase businesses. There are businesses and industries that are going to be more affected by the budget and things like that. So if you're looking at like real estate agencies, buying rent rolls, all that type of stuff, that can all change as well. So yeah.
Of course. In terms of the current trends in the market for purchasing businesses, are you seeing anything eventuating, for example, more people leaving employment to buy their own business, or are there any particular trends in the market?
Recently, I've had a lot more inquiries and clients come on board that are employed and they are looking to have that side hustle for that additional income source. So helping those clients understand, running a business is a lot, and what you can do to prepare yourself for that is a lot of my conversations at the moment, to then ensure that when they do go for an application to the bank, they have all the right credentials, all the kind of right business plans, and they know a lot more than if they were to go into it and just buy a business straight off the bat. So, yeah.
Right. Okay. And in terms of particularly these people that are already employed and potentially going into business for themselves for the first time, what's generally different about what's their financing like different to someone that's already in an established business and potentially buying, to scale or the second or third business?
Yeah, so that's a good question. There are some key differences, and it's not to do with the finance side in terms of like their financials or anything like that.
Okay.
If the numbers work, that's great. The banks look at what we call the 5 C's of credit, so collateral, that type of stuff. To make it a bit easier, we break it down into servicing, security, and management.
Okay.
If it's services and there's a positive surplus, great, we can tick that off. That's generally one of the foundations of it needs to work. Same with security. There are in some instances you can remove security, and that's for if you have an established business, that type of stuff. But from a standpoint of first purchasing, to have yourself in the best position, you need to have security generally. And then we also look at management. So by management, it's actually quite broad. It's what are your skills and what do you have on the table that provides enough evidence that you can run a business.
Right.
So for this, for example, you could be a manager. You're great at managing people. Great, we can tick that off.
Okay.
But do you know how to do BASs? Do you know all the back ends of business, marketing, client acquisition, that type of stuff? What's your business plan? So a lot of clients come to me and they're like, oh yeah, I really want to buy this Pilates business, or I really want to buy this cafe. It's like, okay, great. Yeah, we'd love to help you out with it. What's your plan? What are your goals over the next 5 years? Why do you want to buy this business? And really help them understand there are some businesses that you end up buying and they become a job, which if you're already employed, that can be quite stressful.
You've just swapped one job for another with a
Correct.
higher responsibility and accountability.
Correct. And the risks associated with that and still needing to be employed, depending on the application we've put in, can really, weigh you down. Whereas, okay, if we put a plan in place, we know what your next 5-year goals are, both personal and business, we can put in place, okay, you should be looking at a business that's managed. So yeah, you can still buy a Pilates business, but does it have an existing management in place and teams and all this stuff that's already there to support you as a business owner in that transitionary period?
Sure. In terms of that, does someone with, I guess, no business experience themselves start from a weaker position for the financial application necessarily, or is it maybe just a smaller pool of asset that they can purchase?
Short answer is yes. If someone has no business experience, they've got very little management experience from a people perspective, hiring, firing, all that type of stuff, you are at a disadvantage, which is why I always recommend having a chat to a broker first and say, hey, look, this is where I'm at the moment. I've got the income for it. I've got security, but I actually don't know how to run a business. That's completely fine. That's a great place to start. And the reason why is we can recommend you go and take a diploma or a short course in business management or something like that, where you can go, hey, and go to the bank, hey, I've gone and gotten a diploma in business management. I understand the business plan that I've written up, and this is what it looks like. Here's my 35 pages of what my plan is, how I'm going to make it work, the industry and a bit of a SWOT analysis on that, the existing business I'm looking at purchasing and a SWOT analysis on that as well. And you can really deep dive into it. And when you show that to the bank, they go, oh, okay, you've got experience. You know what you're talking about. You know how it's
maybe
gonna
not the on-hands experience, but you've got a little bit of knowledge now that can, give you that lift or that assistance and support throughout your new venture.
Absolutely.
In terms of, again, first-time buyers, is there anything in particular they're underestimating when they're going to buy a business from the finance application, like the value of anything in particular?
The costs. Yeah, that's the most undermined part. I have had applications where, or not applications, but clients come to me where they don't have enough cash. They might have enough security. So then we have to look at, okay, you've got enough security, but is there enough to also do a cash out portion in your personal name so that we can go, okay, you've got enough capital to last you for the first 3 months to pay employees, to pay wages, to pay super. Okay, what about the rent of the lease on the property? Oh, is the lease coming up to expiry? Is there a risk that you have to move the business? Is it a business that can't move? Are the assets and the equipment at the end of their life cycle, are you going to need to buy more? Is there room to finance more of that as well? So there's all these things where it's like, oh, okay, I've got the cash and I've got the security, but you've got all these additional costs that people don't think about.
I actually really love that you've mentioned the post-settlement costs that the people don't that people don't take into consideration, because I think especially if you're buying a business, you think you're going to go in there, the cash will continue to flow because there's, a business already in play. So that money's coming in, but they haven't actually taken into account what those expenses actually look like and whether the business can carry that, particularly now that you've got to find, like you've got an extra loan to pay as well. And then moving back before settlement, there is often costs that they haven't accounted for either, or at least cash that they were going to require for settlement that they haven't accounted for. So we've come across clients that are purchasing a business, and then I mentioned transfer duty. I'm like, oh, I didn't realize I had to pay transfer duty on the purchase of a business, because most people, or a lot of people, will associate transfer duty with property only, and they don't realize that other assets also require a transfer duty payment, or whether GST is payable and they have to come up with that extra cash to pay the seller the GST on top of the purchase price as well. So little nuances like that potentially first-time buyers may not be aware of.
For example, it depends on the business you're buying too for additional costs that flow through at settlement. For example, there are franchises out there that require you to pay a franchise fee and a franchise training fee.
Yes.
The biggest I've seen is $75,000 in both, like, combined for those fees. And you have to find the money to fund that. A lot of people don't have that additional cash for a business that's valued at $500,000 as an example. So going through those costs and being able to sit down and say, hey, look, I know you want to buy this type of business. Have you engaged a solicitor, a conveyancer? Do you understand the additional costs associated with it? Have we planned it all out? And that comes down to the management side as well, where it's like, oh, I know these costs are going to come up in the future. I've planned for it.
Yes.
And that's what banks really want to know, because a business can be flipped upside down pretty quickly from costs that you didn't plan for.
Matt and I, we often talk about this, but that also goes to particularly when you don't have that experience, to having the right people on your team. Because like you said, if you've spoken to the broker in advance, they can give you a heads up on some of these things, what the bank will be requiring. But it's also a knowledge building sort of consultation as well, because they're highlighting things that you may not have thought of. And then they'll probably send you back to an accountant to do certain number crunching as well. And they'll send you to the solicitor to make sure that you've accounted for legal costs and other transactional costs that'll come into play as well. From that cost perspective as well, I think when I purchased my business, it was the first business I had purchased, but I had business experience. Even I was caught off guard with some of the costs that I was to incur. So in purchasing that business, like updating a website or mail outs to customers or, notifications, and every little thing is an additional cost that you may not have taken into account as well in that acquisition process.
Yeah,
so
and there's a few other costs that come up later down the track as well, where some agreements within franchises, as well as just in a business in itself, you may need to do a whole new fit out for that business. If you're rebranding the business.
Like you said, the franchise is big on that one,
some franchises, every 3 years, you got to do a whole new fit out. That's between 30 to 60 grand, depending on the business, right? And the location and size of the premise.
Yeah.
The other ones that people have been tripped up on when I've mentioned it to them is you're taking over a lease. You've got to have a bank guarantee for that lease. How much is that guarantee for? Is it for 3 months?
6 months, 12 months sometimes, yes. Yeah. And that's additional money that you actually have to come up with.
As physical cash.
Because you don't get to take over the seller's bank guarantee.
No, unfortunately not.
That'd be nice.
It'd be nice to grab that free money.
Exactly. No, that's really helpful. Thank you so much for that, Matt. In terms of first-time buyers versus, I guess, confident buyer, someone that's purchased before.
Yeah.
Do you find that people that have already purchased in the past become overconfident in that process, whether it's in the financial application or that process otherwise? Yes.
They can do. And that comes down to a kind of cash flow perspective and not realizing, again, the costs, because it's like buying a property, right? You buy a property and your next property might be in 7 years, 5 years. by the time that time has passed and you've dealt with the stress of your first business,
Yes.
you forget all the additional costs that came with first buying it. And some people are in really, really good positions as a second-time buyer where they've made note, and part of their business plan from the outset has been, I want to buy a second one. I want to buy a second franchise. I want to expand. So then I want to buy a commercial premise, as an example, to open up a second shop. So being able to know when you are at the point to be able to do it through what does my cash flow need to be is a big one. And then also, what should I have in my cash reserves for working capital? Because now it's not one premise or one site, it's two premises. Maybe there's a shared manager between both premises. What does that cost? What's the additional cost to bring on a new team, new manager, training, staff, all that type of stuff? So we work through those plans with people and kind of pick it apart, not to kind of
Dream crusher.
but to help people understand and be like, okay, this is how we can now do it. Now we know these additional costs. Are we ready to go now, or should we wait 3 months and get you in a position to do it, or 6 months, or should we wait till your next set of financials come through and tell your accountant that, hey, you want to buy? A lot of people miss out on telling their accountants that they want to purchase.
They skip a step.
Yeah, and they don't do that tax planning, because an accountant's job is to make life easy for you and save tax. And
the structuring component is really important.
Correct.
Yeah.
Minimize expenses. Some people go from sole trader to company without, having that full discussion of, I want to go to company, but the reason is because I want to employ people and open up a shop.
Mm.
So, yeah.
I think you made a really good point as well. Whether you're a first-time buyer or you've already run a business and buying a second business, is often when people are buying a business, they're buying it with a vision of what they want to do to the business. In my experience anyway, it's not usually or always that they're going to step in and continue running the business as it has been run. They want to make those changes. And to make those changes, it costs time and money and resources.
It can also be a detriment to the business at first if you try to change it immediately.
Change too much too soon, yes.
And you see this happen with large-scale enterprises taking over another enterprise, and they go, no, we're changing management, day dot. And you're like, wow, you've just lost 50% of your workforce.
Or fired a whole department.
Yeah. You've lost an entire department. You fired an entire 20%, and the other 30% left because they no longer feel valued. Like, there's all these things, and you still see that in small business as well, where someone takes it over and they're like, oh, these people aren't hitting targets. Let's just get some new people. It's like, well, hold up. Part of your business plan was, you can see areas you can improve the business, but you've also got to take that time to get to know the business and why it's got those issues as well. So from my perspective, the financials of a business tells a pretty decent story. I always ask for between 2 to 3 years so that I can have a bit of a deeper analysis and let people know, hey, look, this is what I see in it. What did you see? What are your concerns about this business? And we'll have a whole 1 hour discussion, just bouncing off each other, going, oh, okay, I didn't realize that, didn't realize this. And I'll help them walk through the process of, there's issues with this business, but you said that these are the certain parts that you want to fix to be able to make it a much more profitable business. And here's the other areas that you should be thinking about and tweaking as well. And this takes time. It's not a 1 year transition. You might have in your contracts, as an example, your first contract, you might not realize that you want to keep the manager or the existing business owner on for 6 months to a year. You might say, no, we're happy to take it over and you can stay for 3 months. And then once you show us the way, we can take over. There's a lot of businesses out there where it takes a lot longer to do that. And people don't realize that unless they've run their first business as well. And even
I think even when you've run a business, you can run a business and have an almost run your competitor's business and it's run completely differently.
Yeah. And a big concern for certain industries, right, is especially in mine, is people leave a brokerage firm as an example and they take half their clients with them. That's a huge loss of income. Even the
client retention is a big risk.
Yeah. And I forgot what the word's called, but that you can have a clause in your employment contracts and even in your contracts for purchasing a business where
a clawback or retentions.
A non-compete as well to make sure they don't open up another shop in a different name.
Yes.
Or they've got a franchise, they sell it off, they know how it works now and they start up their own one.
Absolutely.
And take those clients with them.
It's really important to have those provisions in place as well.
Correct.
you've mentioned to me before that you try to understand the client's short-term and long-term goals when you're financing a particular transaction for them. So, for example, if I'd come to you and said, I want to buy this business, a lot of brokers will work around that particular goal and making sure that I get the finance for that purchase. But what you've said to me in the past is like that's just one aspect of the conversation that you have with clients, that you're having a deeper conversation, not just about the purchase of this particular business or transaction, but more than that. So could you walk me through that a little bit?
Yeah, so I like to go through a 5-year plan with my clients. It's one of the first things we discuss once we sit down, have a coffee, or even if it's over the phone and it's the first inquiry. It's like, okay, so you've come to me, this is what you want to do. Great. What's after that? What's your 5-year plan? You want to buy a business? Great. To what end though? Is it a hobby or a side hustle? Are you wanting to leave your employment at some point? And we'll break down those 5 years into, okay, each year, what does that goal look like? Okay, do you want to buy a new car as well? Do you want to buy another house? And then we end up splitting that into personal goals and then business goals. Being able to understand that and help plan out that process helps navigate which lender and what solution will be best suited for that client. You can, like, for example, I could get it funded if that's all you wanted to do and you're like, don't want to do anything else afterwards. But to me, that's not helping you out. That's, yeah, great, I've funded you into it, but there's no room for potential growth. You haven't allowed for all these other costs for down the track for if you're getting new equipment, as an example. And that, to me, that means I'm not doing my job properly. We have a best interest duty. We need to take the client's best interests. And that's just because that's what our industry needs to do. And you really need to understand their long-term and short-term goals to be able to break that down.
So in terms of some clients may not have long-term goals or may not realize or have thought about that, how do you sort of work with those people that maybe haven't turned their mind to what they want to do next, and it's really they're just sort of looking at their next acquisition or their next step in their sort of journey rather than looking beyond that?
This is a big point. There's quite a few clients that don't have that long-term outlook when purchasing a business. They kind of go, well, depending on the client, it's, I'm sick of my job. I'm bored. I think I can do better than my manager in the business I work for.
Don't we all?
Or it's, no, I just want a complete change of industry. I'd really like to run a cafe. I'd really like to run a Pilates studio. I'd really like to do all these things. And it's like, okay, great. We can do that. But to be able to get out that 5-year plan, I asked them why. Why would you like to do that? Why do you want to change in job? What is it that you don't like about what you're doing right now? What is it that you're planning for in the future? You said you want it as an additional side hustle for more cash. Okay, great. What are you planning to do next? Like, why do you need the additional cash? Oh, I'd really like to send my kids to private school. I'd really like to do this. I'd really like to go overseas more often. And it's like, okay, great. Now we know, okay, you might not want to buy a business that becomes a job. You want to buy a managed business that's got systems and processes in place already. And we build out that 5 years. Okay, so you want to go overseas. You want to go to Mauritius. You want to go to Europe for 3 months. How are we going to get there? We put that on the personal goal side. In 3 years, I'd like to go to Europe for 3 years. Okay, great. Let's build that out. And then we break that down into how do we get you into a business that's going to make that plan work? How do we get you into the position of being able to have the cash flow to do that as well? And if that's, I need to introduce you to a business coach because your existing business has sat in the same spot for 3 years. Have you done an analysis on it?
There's been no growth or
Yeah. And I think that's a really important exercise to go through. Otherwise, you may end up buying a business and it turns out to be to the detriment of your cash flow.
Like you said,
finances.
from one job to another as well, potentially.
Correct.
Is this something that clients are expecting of you, or is it something
Absolutely
that really surprises them and sort of, do you ever get any friction, or how do they take that?
It's not friction. It takes a moment to go, oh, okay.
You actually care.
Yeah. There's that aspect too, but it's no one's asked me that question. I've asked a business broker and they've put you in.
Oh, the bank won't ask.
Yeah. Or I've gone to the bank and they've given me a pre-approval, but they didn't ask me what my goals are, or they rejected me and put a decline on my credit file. Like there's all these different things that it's not friction that I get. It's more surprise and they're like, oh, okay, I haven't thought about that. And for me, it's a bit of a sad reaction because I think everyone should be excited for their future goals and be telling everyone. But even if you don't have future goals past, oh, I just really want to buy a business. That's what my next goal is. Being able to take it through to you're doing an incredible job. We're going to get you that business. What do you want to do next? And getting them excited gets rid of that friction.
I think also when you're asking the why question, it actually does move to the goals. They may not be realizing that they do have those goals, but if you're asking them, why do you want to buy a business or this type of business, it may lead to those the next conversation, which is, oh, because I want to generate enough income so that I can, like you said, take the holiday or build a real estate portfolio or buy my dream home and I feel stuck at my job. And that's a good segue for, okay, well, what does that look like?
Yeah, absolutely.
So that's really, really cool, actually. Now, in terms of clients coming to you for that, finance approval or that first conversation with you, when would be the ideal point for them to do that versus to when they actually do at the moment?
When you tell yourself, I'd like to buy a business, or I'd like to buy a commercial property, or I'd like to do this, talk to a broker, talk to myself, and go and get the plan for how you're going to do it. I've got
before you've found the business that you wanted to buy.
Yeah. As soon as it comes up as I would really love to run a business, I'd really love to be a business owner. I'd really like to leave my job and run my own law firm, as an example. It's just when you have that idea and it's like, okay, great, you've got that idea, but some people don't take it that much further because they don't know how to get there. For me, it's as soon as you have that idea, like you're not wasting my time. I want to know your goals and plans. I want to help you plan 2 years in advance what you need to do, how you're going to do it. Can we advance that to 1 year?
Yeah.
So as soon as you have that moment of I'd really love to, ask a broker, how do I do it?
What's the difference between someone that is ready to buy and someone that may exactly not be ready, might just be looking for a bit of guidance?
So there's kind of 3 clients in that scenario. Okay. So I'll run you through each one. So the first one is it's a great idea for them and they'd really love to do it. Okay, how do we do it? We plan that out and they might not be ready right now, but we'll plan out what the next 1 to 2 years looks like, what position they need to get themselves into and how to do that. The second one is they're ready, they want to buy that business, but they might not have the management experience or skills, or they might not have the income, this, that, the other. So then we plan that out. Even though they've come to me with a business and they've signed a contract and they've got a finance clause, I'm like, I can't help you with that, but let's plan out and then find you something that will work. The third one is they know exactly what they want. They've got the experience. They've run a business before, all this type of stuff. And I can help with the transaction as well as help them plan the next steps. So that's typically what I see is one of those 3. And if people sit in between any of those stages, I can still help them out and plan out what that looks like for them. So yeah.
Yeah. So have you ever had to tell a client that you don't think they're ready to purchase? Or
more times than not. Yeah. And that's just from the standpoint of what's your business plan?
Yeah.
I don't have one.
No experience, no business plan. Yeah.
I don't want to fund or I don't want to have a loan that's with someone that is going to be quite catastrophic to their life.
It's a high risk.
Yeah, they could lose their home, they could lose their lifestyle that they already have. A lot of people are excited about the grass is greener, but they don't realize, they've got a property, they're in the property market, they've got all these other things. And if I didn't ask the questions and give a bit of pushback to make sure they are ready so that they can make a really, really good decision and have a profitable business, I wouldn't be able to sleep at night. So I am more comfortable telling someone, look, I love your enthusiasm. You don't have a business plan. It's going to be a really, really big struggle. I recommend you go do a diploma in business management. Understand the back workings of a business. That way, when you look at a business, you can go, that's not a good business. The last thing you want to do is go, oh, that cafe is 60,000. I'd really like to buy it. That's a great opportunity.
Yeah.
hold up, why is it 60,000? Is it just the assets?
Yes.
Like there's a lot more to it.
And often it is.
Yeah.
So I think your philosophy really aligns with like my sort of catchphrase. I always say like that I'm committed to the client's success. So in order for us to be able to help the client actually succeed in the endeavour that they're looking for, ensuring that they're well educated and ready for that. So that sort of aligns with sort of your philosophy as well.
Yeah. Correct. Because it's, there's no worse feeling than knowing that this isn't going to turn out right because you can see the red flags.
Sometimes you just know,
Yeah. I'm happy to be, I wouldn't say brutally honest because that's probably a bit too far, but honest with people about their existing circumstances and scenarios about what they can and can't do.
Sure.
And then how do we go from can't do it to we can do it in a year, in 6 months, in 2 years?
There's also often the can do or should do.
It's not my decision to stop someone entirely. If they, and they can have a chat to me and they go, look, he's not the broker for me because he's not going to fund it.
Mm-hmm.
That's fine. Like for me, if that client doesn't want to deal with me anymore because I'm not going to fund them into that business that I don't believe they're ready for, that's okay. They can go to another broker. But if they want someone who's going to work with them and goal set and work with them all the way through their journey, through purchasing all their different properties, multiple businesses, all the way through to retirement, those are the people that I'd love to work with because I love celebrating with them. I love seeing the success that they are able to achieve. So, yeah.
If I was looking at buying a business, what's the one thing you would tell a first-time buyer that they should be doing at least 6 to 12 months in advance?
Go get that diploma.
Yeah.
If you don't have a degree in business management, even if you do a refresher course. Like if it's been 5 years, 10 years since you've done your degree, things change.
What about if you've been in a management role?
Yeah. So the management side of an application is much more than can you hire and fire people, can you manage people? It's also about, okay, you understand the business workings from behind the scenes. You understand what the payroll looks like because you're no longer just a manager. You're now payroll. You're now like all the other back-end processes, marketing, and you're overseeing it all. You're wearing all your different department hats at the start to learn it all so you know what's going to be good for the business. So I would highly recommend always getting if you run a business already, great. If you feel like the business isn't going anywhere, get a coach, a business coach. Make sure it's a good business coach. There are lots of coaches out there. I have a business coach for myself, and that's because I'm really good at numbers and financing and business plans. And I also need that help every now and then to go keep me accountable for growing that business the way that I want and see it going. So yeah, that's the first thing I'd say.
All right. So let's talk about experience and background of a bit more about that with our business owners. If someone's already running a business, does the trading history do most of the heavy lifting, or do the banks still want to sort of dig deep into like that experience component?
A bit of both.
Okay.
If it's been running profitably and we can show that, that ticks off a large portion of you can run a business because it's been profitable. The next step is how do you then translate that to then buying another business? And that's where you have that detailed business plan. So in terms of that, if it services, so in terms of servicing, if it services and there's positive cash flow, including all debts and liabilities and your personal expenses and all that as well, great. If you've got security, even better. A lot of banks prefer you to have security. If you are tied up with your existing property with your current business, there's ways for us to remove that security and then you can use that additional equity to then purchase your next business. So those are quite, in terms of solutions, quite easy to do. The management side, I can't teach you, I can't train you. The bank will really want to know and understand that you know how to run a business and understand it. So that previous history of, yes, you've run a business before, does quite a bit of heavy lifting. They'll just want to know what your next business plan is for this next business.
What about industry experience? Does that have, like when I'm buying a business and I've got industry experience, does the bank really, does that add any weight to my finance application as opposed to, for example, if I was
completely
swapping industries?
Yes. And the short answer to that is you'll know what's going on in the industry. You know the difficulties and the ins and outs and the risks associated with that industry without needing to do a SWOT analysis pretty quickly. You'll be able to put together a pretty good business plan, knowing what existing business you've worked for and their weaknesses are and how to make and improve that part as well. So if you're an existing business owner going from industry to industry, your prior business experience does a lot of that heavy lifting where they go, okay, they know what they're doing. It's just now they're buying, instead of a cafe, they're now buying a Pilates business.
Sure.
And this is what their business
Might still
plan is.
be a retail style of
Correct.
business.
Yeah, but you've run a business before. You know how the processes for hiring, firing, payroll. You've got your provisions for tax sorted as well. So all those types of things is not easy to teach someone. And you learn a lot when you become a business owner. A lot of it's personal development in the first year.
Absolutely. Nothing teaches you like actually on the job business
Correct.
owner.
Yeah.
What's the most common experience-related red flag that you see?
Do you mean in terms of applications or do you mean in terms of an individual?
For finance applications. So if someone's come to you with a finance application and you're looking at the level of experience that they have, whether it's a lot or a little or things like that, what's the kind of red flag that sort of says to you for like your lenders that they're not going to really look at that favourably?
Yeah. It'd be your business plan. If it's 5 pages long, have you done enough analysis and do you have enough there to support what you say? Do you have a 12-month cash flow that's been prepared?
Mm-hmm.
So if people come to me and they don't have those 2 things sorted, that's a pretty hard sell to a bank.
Yeah.
Because I can help you position yourself with your servicing and that. And there's so many different lenders and banks out there that are willing to, you know, you can adjust certain things to make it work, and they have different borrowing and servicing capacities. Some will do it with and without security, all that type of stuff. But if you don't have the management experience to back making a business profitable, it's going to be a hard sell to a bank.
So in terms of the financials, how far back do the banks want to see the financials of the business that you're purchasing?
If it's a brand new business, generally they want to see 2 plus 12 months cash flow.
Okay.
If you are running your existing business and purchasing another business, they will want to see the 2 years plus cash flow for the new business that you're purchasing, and they will want to know between 1 to 2 years history on your business.
Okay.
For myself, I want to see 3 years, and some banks want to see 3 years history.
Yeah.
And
my experience, the accountants typically ask for about 3 years as well.
Yeah. Because
to get a good feel of like where the business.
It tells you a whole lot more because if you're going to sell a business and you're really preparing to sell it, you might sell it with the 2 years and you've made those 2 years look really good. I have come across cases where buying a franchise and this person had 2 businesses. They were selling the franchise and they were running all the costs through the other business to make the net profit look way better than what it should have been.
Yeah.
And that is really hard to confront with a client. Hey, look, that's not the business you think it is. I would be asking more questions. And that's why we ask for 3 years as well.
And in terms of deal breakers, what's a genuine deal breaker in those financials that you might see versus something that's just a flag to work through?
If the business is running at a loss, you really need to understand why. When I do an analysis on a business, I look at, okay, is the costs outgrowing the profit year on year or the revenue? And I kind of look at that and look at it in percentage wise. So if you're looking at revenue and your sales have increased by 20% year on year, but your costs are increasing by 30, your net profit slowly diminishes. And is that because it's an industry-wide thing, or is that just the business specifically? And how are you going to address that? And that will make up part of your business plan.
It may be something like their lease is well over market and they can really reduce that.
Yeah.
In some
Another
ways.
one is that someone had a business, they signed up a new lease and they had concessions on that lease for the first 2 years. And now they're like, yeah, I'm ready to sell it. But the 3rd year is going to have a much more expensive lease.
At market rate.
Yeah. And that could be a reason why they're selling. And they're no longer going to be able to make money on that business. So and that's why we look at those things, because looking at that cost base and the growth of it can show you, okay, why is that growing? And you look further into it and you go, okay, here's the lease. Here's the different reasons why that's potentially grown by 10 to 20,000 year on year. How's that going to affect the business? What are their employee costs? Are they overpaying employees? You can break all that down and look at it from the financials. And that's what I mean when I said earlier, the financials, from my perspective, tell a really good story when you look at 3 years. So
what's happening inside.
Correct.
You've talked a lot about the business plan.
Yep.
Do applicants always need a business plan, or will the bank allow just a solid forecast?
Depends on the lender you go with.
Mm-hmm.
For my peace of mind, I'd like to know that you've got a business plan.
So it's a good thing to have, but not necessarily always a criteria of the banks?
Depending on the bank, not always.
Yeah.
If you have a really good, solid business plan, it's easier to sell to a bank or lender to be able to get you what you want. And that's just purely from a standpoint of, okay, they know what they're doing. Yeah, we're pretty confident to approve this.
Let's talk about the forecast. How detailed does that need to be?
It needs to be 12 months. It needs to show what your estimated revenue will be, net profit, what your expected costs to grow are, and you need to be able to reflect what industry changes could affect that as well. So when you talk to your accountant, you have a chat to them and they'll help you prepare a 12-month forecast on that business and all that as well, based on the prior history and the different levers that you're looking at pulling to be able to make it work.
Does it help if the applicant has like savings deposit ready to put down on the business?
Yeah, absolutely.
Like actual cash?
Yeah. And there's many reasons for that. There's a lot of costs as well. But also if you've got cash ready to go, we can look at financing the whole business and you've got the cash there for all those other costs. We could use the cash as a full deposit. We could make it a split of use part of the deposit and the rest as a loan. And we can really play with the numbers and make it work in favor of the client. We can make it really work for, okay, there's more options for lenders if we want to maximize the lending or minimize the lending. And there's a lot more options for pretty much rate shopping and fee shopping. So a lot of lenders will charge higher rates for business lending and that, but depending on if you've got security or a larger deposit or all that kind of things does affect it as well. So
Okay.
Yeah.
You also mentioned earlier about people wanting to buy a business as a side hustle.
Yeah.
Is that a feasible option, and banks really do allow that? So, for example, they can keep their current job in the interim, or is a lender expecting them to fully commit to a business if they're buying it?
Some lenders, it's actually preferred because you've got that guaranteed income outside of the business for if anything happens.
Mm-hmm.
So in terms of that, as long as you are looking at a business that's not going to become a job for you
Mm-hmm.
and it's not going to take you away from your employment, and you're buying an existing managed business that has systems in place, banks look at that preferably, where they go, okay, you've got your job, you know this is a managed business, and you've got a solid business plan. It's hard for them to see that failing.
Mm.
So
I've seen gentleman actually buy a business for his wife. So he's not going to be managing it, the wife will, but he's the one that's purchased it for her to run. So things like the studios and things like that.
And that'll be classed as a managed business because there's a external third party that's managing it.
Okay. If someone's already running a business, how is combined income from both treated during the transition period? So myself as an example, if I already run a business or I run a law firm and I want to buy another law firm, so how is that combined financial? So are we just looking at the business that we're purchasing, or are we looking also at my trading history?
We look at the whole scenario of, okay, what's your personal income, personal expenses, debts, liabilities? What's the existing business that you run? What's its net profit after paying you as an employee plus any debts, liabilities, costs? What's the new business going to be? And how much income is it bringing? And what's the new debt that you're taking on? And what does the 12-month cash flow look like? So then we're able to go, okay, this is your personal income, and it passes servicing for all your personal stuff, as well as you've got this much left over to help with servicing the new debt. Your business, we can take that additional net profit. There's other add backs that we can add in, like interest and whatnot, and depreciation depending on the assets and loans that you have within your business. And then we can also look at the new business. There's different things we can add back with the new business as well, because obviously you're not taking on their debt, you're not taking on other things as well. So we can add back certain
If you're buying
things.
just the business asset. Yeah.
Correct.
Yeah.
Yeah. So then we can add that net profit and add backs to it and go, okay, does it all service, including the new debt?
Yeah.
And that's how we look at it.
For another podcast session, I actually have seen where someone's purchased a business solely by paying for the liability of the business. So not paying for it, but essentially taking over. The liability of the business rather than paying the seller a purchase price. Completely different.
Yeah. Look, and that's, depending on the agreements and contracts that you have with the seller, right? That seller might just want
they want
for
out.
that. They just want to leave. Yeah.
Wash their hands. Yeah.
Yeah.
Just in terms of the financing for the business purchase, how does the lender treat, for example, a spouse or partner's income if they're not directly involved in the business? So
as I said before, we look at personal, we look at the business. So that personal income and servicing for debts, liabilities, mutual expenses, individual expenses, all that type of stuff. We look at that and then we take whatever's left over and we can add that to servicing. And this is where it becomes okay, what's the benefit for that spouse or partner in this example? So the bank will look at, okay, the new business that's being purchased, is that just going to be a sole director? Who are the beneficiaries? If there's a trust involved, who are the shareholders? And you can really break that down and talk to the accountant like, hey, look, this is what the bank's going to need. Different banks require different things, but generally we need to see that there's a benefit for the spouse going on that loan as well and being a guarantor.
Yeah. And that actually takes me to my next question. It's about security. So when we are purchasing a business, what type of security are the banks typically looking for?
Everything.
Anything that you can offer.
Pretty much. So short answer.
What does that look like?
Yeah. Short answer is there's a list. Physical property.
Mm-hmm.
Can you offer
so
that
real
up
estate?
Yep. Can you offer that up as additional security? What does that look like? What assets in the business can be offered up as security? The banks will or will not take it sometimes. Depends on the lender. And then you've also got personal guarantees, directors' guarantees as well. When you go to purchase that business, they will get you to sign personal guarantee. They'll get you to sign a lease guarantee to make sure that that's guaranteed the lease, the business continue operating. They'll get you to sign a director's guarantee. So the director's guarantee ensures that if the business fails to meet its repayments, you will then take
personally be liable for those repayments.
Correct. Yep.
And so that usually when you, not always, but often when you're buying a business or setting up a business, people set them up as a company.
Yep.
So that's where the company sort of is the front of the business, but you've got your directors and shareholders, and they're the ones that are really behind the business that are required by the financiers or the lenders to provide that security.
Correct.
And there's also the PPSR, the general security agreements as well.
And stuff. Yeah. So
can you explain that a little bit?
Yeah. So in some of the plans that I do with clients is we look at, okay, what does it hold in the next couple of years? Generally, you need physical security to start with. But if you're not comfortable with having your personal property as a direct kind of thing that the bank can reach, we can look at what's called a GSA, so a general security agreement over the business. So they'll go after the business first and all assets under that business. You will still have a personal guarantee and director's guarantee, which in that instance, they can still get through to that property eventually, but it's a longer process.
Yeah.
And we can then use that additional equity for future purchases as well. So
in terms of that, what if the applicant doesn't have any real estate property? So they don't actually own a home, but are looking for their first business acquisition.
Can still be done.
Yeah.
You would need a hefty cash deposit. Generally, you'd be looking at like a 40 to 50% deposit, the total, depending on the size of the business as well. There's certain businesses that banks won't touch if they're too small. And they need to be a pretty solid business and get a full business valuation done on it. So there are other costs. There's more fees involved and it's a higher rate, but it can be done.
The bank wants to know that if something were to go sour, that there is an asset that they can call on.
Yeah, so then you'll have a GSA, which is that general security agreement, and you'll have your personal guarantees and directors' guarantees in place, which whatever assets you hold are going to be in reach, as an example. But with that larger deposit holds a whole lot less risk for the lender, where they go, okay, because you're only buying 50% with debt, if the business goes south and keeps going south and they can no longer meet their repayments, the assets in this business are X plus the profits and stuff, and they can actually take over that business. Or you can go to a business restructure experts and turnaround experts that can help you with that later down the track as well.
Okay.
But yeah.
Okay. In terms of the personal guarantees that are given by the directors and shareholders, to what extent are they committing to in those personal guarantees?
That's a question for a lawyer because the guarantees can vary depending on the lenders.
Yeah.
But generally it's you are personally liable for that debt if the business can't pay it. And that includes you could go bankrupt.
No, absolutely.
That's a short way of saying it.
So that was going to be my next question is what's one thing that you wish they understood more before they signed the personal guarantees, or that you try to explain to them that the risk involved in the personal
The risk involved in it and the value of getting legal advice.
Yes. When I do give that legal advice on the personal guarantees, I actually make it my job to explain it to a point where they are scared. That
you need to be.
Yeah. So I'll explain it to the point where, it's not just the loan, it's the interest on the loan. Usually the terms of a personal guarantee are you are the person that will guarantee to the bank if that doesn't get paid, you will personally pay it. So whatever's left on the loan plus interest, and interest accumulates on interest. So if interest isn't being paid on the loan, that continues to accrue on top of interest. And then there are enforcement costs, which can be legal costs, court costs, marketing costs, all sorts of things, sale costs to get that asset or assets on the market, all of those types of things. And end of the line, what you've said, it could lead to bankruptcy.
Yeah. Which I don't want for anyone.
No.
And that's why I focus so heavily on what's your 5-year goals and what's your business plan.
And ensuring that what the transaction they're entering into is going to be a successful transaction, whether it's the purchase of a business or a property.
And there are some cases where there are things that are outside of that person's control and it's industry changes. But that's why you should do a detailed business plan for, what are the industry
risk
changes
analysis
and risks,
as well. Yeah.
And your SWOT. So, yeah.
Fantastic. Okay. So we're going to start. One last thing I wanted to talk to you about is people that are buying like the second business. So we've talked a lot about your first business acquisition. For someone whose first purchase goes well, what does buying a second business tend to look like in terms of that conversation?
It's a pretty exciting conversation because they're expanding. They're going to bring on additional income for themselves, all that type of stuff. It's also, how do we do it? What's the best way to do it? What's the most cost-effective way to do it? Is it feasible at the current stage, or when will it be feasible? So the conversation is very much a plan of, okay, this is where you sit. This is where you need to be. Let's have a chat to your accountant. What's your tax planning going to look like? So it's a lot of
I guess from that planning perspective is we are going back to, day dot to say, all right, when is the best time to talk to Matt is the time when we've got that idea, okay, I'm ready to start thinking about buying that second business and what do I need to do to make that a success as well.
Correct. Yeah.
And does having a good first experience with a lender make it easier for the next application?
Yes and no. Your circumstances will change, so you may not go through the same lender twice, as an example.
Okay.
In terms of the banks, I probably shouldn't say this, but they don't value loyalty all that much.
I think we know that.
Yep. So, and that's why I have a job, right?
Exactly.
That's only a small part of my job. But yeah, so in terms of that, it's if the client has a good experience, great. Happy to go through the same lender if that's their desire. It's my job to show them the different options and opportunities for, saving costs as well as getting what they want. And in some instances, it might be taking on additional costs to be able to structure it the way that they want it structured.
Okay. So, and I don't know if you can answer this, but when somebody comes to you and say, look, one day I want to own 3 businesses. So this is my first purchase. Once I'm, fine-tuned the business here, I want to move on to the next and the next. That first conversation, how would that shape sort of the structure of your finance application, if at all?
Yeah, so we would plan out what those 3 purchases could look like and what the expected purchase prices are. Are you wanting to buy a bigger business next? Are you buying the same type of business? Are you purchasing a competitor and taking it over and rebranding it? So that's where they may not know those answers yet, but we can start planning, okay, this is how you want to structure it. So then we'll look at the existing lender that we're going to. Why are we going to them? Is it so that, yes, you can get into that first business, and then later on, it might be 2 years down the track, we're going to refinance you and restructure you. So we don't want to put you on a fixed loan. Do you want interest only?
That's
Are
important.
you paying down principal and interest? How should you structure it? Should a portion of it be interest only so it's manageable repayments as well? And then we really deep dive into, okay, after that 2 years, like if we've used security and your property is security, do we then swap it over to a GSA on that business and free up the equity for you to have the opportunity to purchase that next business? Have you had the conversations with your accountant after you've purchased your first business to go, hey, look, I need to make this look as good as possible, and then also planning your tax provisions correctly to take on that additional net profit, so then you've got enough there to pay down that tax.
Okay. I've got a question. Does it make any difference to that planning the term of the loan, whether it's a 10-year, 20-year, 30-year loan?
It can, yes.
Okay.
And that comes into the conversation of part of the refinance. So the first one we do is we structure it in a way that's going to be affordable so that they can build up those additional cash or that additional cash to be able to then have as, swap it over for that new lease guarantee, to be able to have it as working capital for the next purchase. And then we also look at, okay, at that stage of refinancing, should we extend that term out to give you additional borrowing capacity? Because the lenders will go, okay, great, this is interest only. How are you going to pay it out? What's the idea? If you've got 1 year left, you got to pay $300,000 in a year.
Yeah.
Is that affordable? Probably not. We look at that and take that into account. You can get 30-year loans for business lending as well. And you got to really understand that that means you're paying interest on the 30 years. But if it's part of your plan to expand and we can make it work, then that's when we look at those longer and extended loan terms to make it affordable for you. Yeah.
All right. So rapid fire questions, Maddie.
Yeah.
Are you ready?
Fire away.
All right. So this is the part where I ask you a question and the first thing that comes to your mind is your answer.
Yeah.
You're stuck with it. Okay. One thing first-time buyers get wrong about financing a business purchase.
The costs.
No need to expand further on that one.
No, we went through that.
Property security or cash flow, what matters more to a lender?
Cash flow. If you can't service it, you can't buy it.
Very. One document every buyer should have ready before talking to a broker.
I guess that varies on the brokers. For me, it would be your goals.
Okay.
Because we can plan out what it looks like. For brokers that are more transactional, it's probably going to need a bit solid business plan and a contract. So I'd say your goals. Yeah.
All right. Can anyone at all realistically buy a business, or does it take a particular type of person?
Anyone can do anything within reason is the short answer. You do need to be in a position to be able to purchase, which is why you need to start that conversation early. So we'll walk you through how to do it. But yes, realistically, anyone can do it.
One question you always ask in that very first conversation with a new client.
What's your goals?
Amazing.
Why do you want to do it?
Perfect. That's true. All right. Thank you so much, Matt, for coming on the show today. It's been really great speaking to you. And as always, you've enlightened me on a whole new world and a whole new area of financing.
You're welcome.
And I really appreciate that. I think you really add value to your clients as well as our clients actually as well. But before I let you go, can you just, if someone does want to work with you, how can they find you?
Yeah, so we've got a website, RFS Finance. There's quite a few of us that work within the business. I specialize in business financing. So reach out to myself. My contact details are on there. Also, my best contact number is 0423 956 360. That is my personal number and work number. So shoot me a text, give me a buzz. Alternatively, you can send an email as well, which will put up those details. Do you
work solely with people in Queensland or Brisbane, or can you work
Mixed.
Across Australia?
Yeah, so I've client example. I got a client helped them expand through to other states. So
Okay. And who do you feel you're best placed to help right now?
people who are excited for their goals and to achieve them. So whether it's in the next year or 2 years, or if you're ready to go now.
Fantastic. And do you have LinkedIn? I don't know if you mentioned
I've
that.
got LinkedIn as well. Yes.
Yeah. So what's your LinkedIn name under?
My full name, just Matthew McCartney. Yep.
Matthew McCartney, MC?
MCCARTNEY.
Excellent. Thank you so much, Matt.
You're welcome.
Have a great afternoon.
You too.
You've been listening to The Commercial Edge, the podcast where we dive into the real stories, strategies, and legal insights behind smart business and property decisions. I'm your host, Elizabeth Rebolledo, lawyer, founder, and fellow entrepreneur. I'm so glad you joined me today. If you've got value from this episode, make sure you follow the show so you never miss a conversation. And if you're building, buying, or growing something great, head to ardorlegal.com.au. We've got practical resources, guides, and legal support to help you move forward with confidence. Thanks again for tuning in. I'll see you in the next episode.